There's an old saying: generals always prepare to fight the last war. It's a mistake that in warfare is survivable until the fundamental systems of conflict change. We all remember 2008, the housing bubble, the banking collapse. We prepared for that war. We watched for risky loans and over-leveraged banks. But what happens when the battlefield itself is completely different? What if the next crisis isn't a slow-motion crash you can see coming, but an instantaneous lock you can't escape? Imagine opening your banking app during a crisis and seeing your balance untouched, but every transfer button is grayed out. The warning signs today aren't signaling a repeat of the past. They're pointing to a structural change in the financial system itself. The next crisis won't just destroy wealth, it will restrict access. It will freeze you in place. Because while everyone is watching the front door for the ghost of 2008, a new threat has already rewired the house. To understand the danger, we have to see how the plumbing of crisis has evolved. In 1929, the crisis was physical, money was tangible, and fear spread as fast as people could run to the bank to pull their cash out. By 2008, the crisis was about slow financial plumbing. It was a story of private debt, toxic assets bundled into complex securities, and a chain reaction that moved at the speed of human decisions. Panicked phone calls, emergency board meetings, and week-long bailouts. The contagion was slow enough to watch unfold. The 2020 liquidity freeze showed us the next evolution. A market shock met with instant, massive policy intervention. The government didn't just react, it flooded the system in days. Now, the system has transformed again. We operate on instant digital settlement rails combined with centralized permissions. This is the new architecture, and it introduces risks that the old playbook can't even comprehend. Digital choke points, instantaneous algorithmic reactions, and the speed of policy that outpaces any human response time. The first pillar of this new architecture is policy speed. Today, government and central bank decisions are the market signal, and they are executed with blinding speed. Think of the sudden implementation of tariffs, sanctions, or capital controls. For decades, global commerce operated on predictable rules. That stability is gone. Today, access to markets or payment systems can be turned off overnight by a policy decision. This isn't a slow degradation of value. It's a digital choke point, instantly cutting off the flow. This policy-induced paralysis cascades through the economy. When access is uncertain, businesses don't invest and capital doesn't move. Fear of being frozen has the same effect as being broke. The second pillar is the algorithmic accelerant. The vast majority of financial transactions are now executed by automated systems. In 2008, contagion moved at human speed. Today, it moves at the speed of light. The danger is what's known as algorithmic herding. As AI models trained on similar data detect the same stress signal, they can trigger sell orders in perfect unison. This isn't a market crash. It's a catastrophic evaporation of liquidity. In plain terms, everyone tries to exit at once, and suddenly there's no one left to buy. Buyers simply vanish in microseconds. We saw a preview with the flash crash, but the systems are now exponentially more complex and autonomous. The risk isn't in one bad asset anymore. It's baked into the market's code itself, capable of spiraling faster than any human could intervene. This brings us to the real, fundamental risk of the next crisis. It's not about your assets losing value. It's not about the official inflation numbers. The real risk is a crisis of access, mobility, and timing. The most dangerous moment in a crisis is when you're solvent but frozen. This is the scenario the new architecture makes possible. Imagine a flash crash where algorithms have created a liquidity vacuum. You see your portfolio is still valuable, but you can't sell. There are no buyers. You are solvent but frozen. Or imagine a geopolitical shock that leads policymakers to instantly freeze certain international transactions or restrict access to digital currency platforms to prevent capital flight. Your money is still yours, technically. The number on the screen hasn't changed, but you cannot move it. You are solvent, but frozen. The great debt shift from households to governments only heightens this risk. With global public debt at historic highs, governments have a powerful incentive to maintain control over the financial system in a crisis. When a country's own debt becomes the source of instability, the playbook of bailouts runs out. The new playbook involves controlling the rails, creating choke points, and prioritizing systemic stability over individual mobility. It's a world where your access can be suspended for the greater good. This isn't about predicting collapse. It's about understanding how access and control now work in modern systems. If you're waiting for a repeat of 2008, you're preparing for the wrong war. The crisis we're heading toward isn't defined by falling prices, but by restricted access. Once you understand that access, not value, is the real risk, the next question becomes unavoidable. What actually holds up in a system like this? In the next video, I'm going to walk through exactly that, and how people who understand the plumbing prepare without panic. The playbook from 2008 is obsolete. The next crisis will not follow the old rules, because the game itself has changed. It won't be a crisis of bad debt metastasizing through slow plumbing. It will be a crisis of instantaneous choke points, where policy decisions can freeze capital flow in a second. It will be a crisis amplified by technological speed, where algorithms can cause liquidity to vanish faster than any human can react. And it will be a crisis where the real danger is not insolvency, but being solvent, but frozen, unable to access or move your assets when you need them most. This isn't about a single bubble popping. It's about the fragility of a hyper-fast, hyper-centralized system where access is a privilege, not a right. Recognizing this isn't a cause for fear, but a call for awareness. The greatest risk we face is navigating this new world with an outdated map. The old playbook is finished. It's time to start writing a new one, intentionally.